Welcome to Idea to Investment, the podcast where we dig into the exciting world of entrepreneurship and investment. We tell the stories of the tech creators doing innovative work and the investors who back them up. Along the way, unveiling the fascinating journey from the birth of an idea to scoring crucial investment. We highlight the voices of entrepreneurs, showcasing their grit and creativity, all while gaining insights from the investors who believed in those dreams. Get ready to be inspired, stay informed, and stay tuned as we explore the awesome collision of ideas and investments. Idea to Investment is a production of Tech Alliance of Southwestern Ontario and is sponsored by TD Ferrera Wealth Advisory Group.
I'm Pieter Dorsman. I'm a Vancouver-based advisor, investor, mentor, active person in the tech ecosystem.
That intro, Peter, is tough because you do wear so many hats. And first of all, thank you so much for joining us on the podcast. It's great to have you. I think this is going to be such a valuable resource for both investors and for founders. So let's dive into you first of all. Like I said, you have worn many hats as a founder, an advisor, an investor, CFO. But let's go back to the start and what originally drew you into the startup and investment space.
Yeah, I started doing this when I came to Canada, actually, which is in 2000, so 26 years ago, this month, actually. Before that, I was a banker. I worked in London and in Hong Kong, big-time investment banking. And around the year 2000, we had sort of what was called the internet boom and bust. And that is when the tech sector really got going. And it always fascinated me. And I came to Canada for a change in lifestyle, to live with set up a family, have, after 7 years in Hong Kong, have a bit of quality of life. And it's like, what am I going to do now, right? There's no big banking going on. I've done that. So I decided to use my financial skills to start working with tech companies. And I didn't know anyone here. I actually had never been to Canada before. It was just a jump off the deep end. So I started working with young entrepreneurs, advising them, helping them write business plan. But before you know it, you get deeper into it. And I started investing, and I started sitting on boards, and I started doing operational roles within companies like part-time CFOing. Out of that grew a fund. I became a speaker. So I just jumped in, and the reason for that is that I wanted to sort of get closer to technology. I wanted to be involved in that, and I wanted to be my own person. So hence, I always worked for myself in a sense. I never was committed to one entity, and in that way, became an entrepreneur myself, working in the tech ecosystem in different capacities.
So obviously, moving to Canada, there had to be some bit of culture shock, but were there vast differences when it comes to investing and finance?
Well, that's a good question. So I'll answer it in two ways. There was a big culture shock. If you live in Hong Kong, there's a 24/7 culture, and you come to Vancouver, where things are, arguably a bit slower, even slower than in Toronto area. That was a cultural adjustment. But, I always, when I do talks around financing, and I have a lot of people coming, as students, entrepreneurs, investors who want to learn from my experience, I always say, like, the biggest deal that I worked on in Hong Kong was $2.6 billion. That was financing a private power plant in Indonesia that we as a bank sort of advised on and underwrote. Coming here, you're doing deals that are like maybe $1, $2, $3, $4 million, a lot smaller. But the principles are very similar, right? It's all about taking risks. It's all about allocating the risks, aligning the interests of investors with the company, coordinating the work that lawyers and accountants do in the process. It's the same thing. So the number doesn't really matter. The process is the same.
Based in Ontario, we're very familiar with what's happening here in BC. Give us an idea about the tech landscape there.
Yeah. Well, so when I came in 25 years ago, it was sort of, non-existent. It was started to emerge with a few software and a few biotech companies. A lot has happened since then. An entire ecosystem has built across different industry sector, where it's life sciences, it's software, hardware, a lot of clean tech, a lot of consumer tech as well, a lot of technology around sort of the outdoors. So there's a town here called Squamish where there's a center for rec tech, right, recreational tech. So there's an awful lot of happening, helped in no small part by the number of immigrants that have come here, very supportive government at the provincial level, A lot of funds have been set up here. It's not the scale that you have in Toronto, but I would say it's a healthy and thriving ecosystem. Although people in British Columbians have the tendency sort of to beat themselves up, and we're not doing great, we're not that great. But if I look at what's happened over the last 25 years, I think it made phenomenal changes and created phenomenal great companies and phenomenal opportunities also for newcomers here who immigrants who want to start a company or who go to university. I also do a part-time class at Simon Fraser University, teaching them about finance and entrepreneurship. And out of that come lots of companies. So it's I would say it's a thriving environment, and it's sort of validated because next week we're getting a web summit, which was a Toronto-based thing. We have that next week in Vancouver. So and I hear there's about 20,000 people coming out here for that conference. So there's definitely something happening in Vancouver that's positive, and for everyone to participate in one way or the other.
Yeah, it's interesting you mentioned that, that the sector kind of beats themselves up and says we're not doing enough. It seems from our perspective to be thriving. So what drives that that I don't want to call it insecurity, but for lack of a better word, what drives that insecurity?
Well, I think that insecurity is partly cultural, we're always number three behind Toronto and Montreal. That may be a thing. A lot of companies, don't forget, and that is true, a lot of companies disappear. They get acquired by US companies, they quickly disappear before they can thrive. So we haven't really been able to build big tech companies, right? So if companies, anchor companies like we had in the past with Electronic Arts, for instance, or that you have with Shopify in the East. So companies that stay here, grow big, and attract other companies around them so that you can really have a much bigger, a much more consequential ecosystem. So in that regard, there is work to be done. But it's not a reason to be negative about it. It's like we need to figure out a few things as we grow as a community.
So, Pieter, you mentioned a few sectors, life sciences, rec, but is there a specific trend or a trait that you would say defines the BC as a tech region?
Well, I see in all three sectors, I see, and my three buckets are always clean tech, life science, and software. In all three, I see a lot moving, quite frankly. Biotech used to be a lot stronger, but then at the same time, we have companies like Aspect Biosystems here. We have Foxhall Bioinnovation. There's a lot of companies that make strides. So that sector is making a comeback. Clean tech has grown significantly, in particular also agricultural tech, ag tech. I'm an investor in a very successful ag tech company that was struggling to raise money initially and had to go sort of to the prairies to find investors. But they've pulled it off in the Vancouver area, and I would say this same thing is definitely true in the software sector, which is of course large and driving. So I think each sector is sort of growing in its own way in ways that are building successful companies. Whether they become sort of the anchor companies that stay here and become billion-dollar companies, remains to be seen. But we're working on it.
Indeed, that remains to be seen for every sector, every company. You have, you've had multiple tech companies that you've scaled and exited. I'm curious at what stage of business, of a business's growth, should companies start considering that exit? And what do you think? What do you think are the key signals that they're on the right path and maybe ready for that?
Yeah, well, it's a good question. The question is, do you want to exit? Do you want a build company? I had a talk yesterday with the entrepreneurs as part of Startup Week, and I always say, like, I want entrepreneurs to sort of have the dream to build something big, right? Sort of, but in that journey, and that journey can take 5 years, 10 years, 20 years. Very often, particularly in clean and biotech, it takes a much longer time. So building something that eventually is of a size that delivers an exit for the community, the founders, the investors, that is meaningful. That takes a lot of time. But as we've seen, and I've seen it last year when we had two small software exits, which were okay, but not great. All of a sudden, people will pop up, right? To say, hey, that's interesting what you have. We're interested in buying the company. And sometimes it's combined with founders who've been at it for a long time, because you only see the headlights, right? There's a big exit, it's a big success. You don't see the suffering and the pain of many, many years that go before that. And some investors get tired. So sometimes it's like, okay, we have an opportunity to exit the company. It's not what we wanted. It's not the $100 million company that we planned for, but hey, we're all made some money. The founders can, take an early retirement or do another venture. So the question here can be answered in many different ways. So my goal is always to build big companies. Buyers will emerge, in the space, unless you're tired of it, and then you bring in an advisor or a banker who can manage a process where you try and sell a company. But that's not always the best way to do it. You want people to come to you and buy the company, and ideally you have a few companies come to you to buy the company, and then you have a competitive bidding process and you get a good price out of it. So exits come in many different ways, but my preference is to take the long road and build something that's really big and meaningful. To have an impact, and in that way, you also create a lot of new investors that can build new companies. Out of a big exit, always come lots of new companies. So that's the exciting part of it.
Yeah, and I'm sure it can be a very frustrating thing too. Knowing whether or not, because it seems kind of obvious that the real signal that you're ready for an exit is when buyers start coming around, right?
Yeah.
So how can you reassure someone that yes, you are on the right path and you will get there, or is it just a complete roll of the dice? You just never know.
I would say it's well you can plan for it, but I'm chairing the board of one life science company now that it's on a clear trajectory, but we haven't set a timeline. But we've said we're building something, and the revenue is growing. We're scaling it. We've attracted fresh capital. We've hired for it, and we're building a bigger company. But we can be ready for an exit in the next 2 years. But we could also build something much bigger that will be sold in 5 or 10 years time. That's and in order, and you have to deal with investors, right? Because the investors are sitting there for a long time. So how do you deal with that? Well, maybe you can buy them out, or maybe you can start paying dividends. So my first investment was in a company, a software company based here in Vancouver, 22 years ago, and they're doing well. And all the shareholders are saying, when do we exit? Can we please exit? And the board of management saying, well, we've got some time to go. There's better opportunities. We're still building. But, in the meantime, we're going to be able to pay a dividend because the company is doing well. And that sort of, placates a lot of the people said, okay, well, we can live with that. We can go for a few more years to get a dividend check every year. It's sort of a nice thing to have.
So then, what do you think separates those founders from like the ones who know that they're on a growth trajectory from the ones who may stall? Is it like a planning mindset, or is it simply timing the market correctly?
Well, it may be timing the market, and also maybe that some companies are not meant to be big companies, right? And sometimes the founder sense that they go like, okay, we've built this to X $1 million in revenue. We see competitive forces in the market. Maybe, even if we attract more venture capital and hire up, we may not be able to go in the direction that we thought we were going, right? Or it may require such a superhuman effort of another 10 years that why don't we exit now? Right. So, and I've been in a few cases where that was the case, and I was at the board level where the founder said, okay, I think we should seriously consider exiting the company. We don't think we can push the envelope much further. And if we do, there may be risks that we don't know of just today. So, better a bird in the hand than and take that and sell the company, which is what happened. And, everyone was happy, but it requires a serious discussion among the founders and the board and the lead investors. Like, are we going to do it? And if we're going to do it, how are we going to do it?
Let's talk about that relationship between the founders and the investors, and because things frequently, more often than not, don't go according to plan. So how, from an investor perspective, what kind of communication do you like to see from a founder when things do go wrong?
Yeah, well, I like to see everything, and in fact, this is always a point that I emphasize, right? Because there's a lot of founders who like to give the good news, the best, the new contracts, the cool employees they've hired, and they sort of. I've worked with one founder, and she always sort of buried the bad news, and she didn't do that intentionally to lie, but she felt like I need to give the good news to keep everyone happy, and if something bad happens, well, okay, I can handle it on my own, which is completely the wrong approach, because I always say, give me the good news and give me the bad news as fast as you have it, because we're actually here to help. We're not here to berate you as investors or board members. It's like, okay, you've got a big problem with an employee, or you're in litigation over a contract that went sideways. Okay, well, we can help. We have lots of expertise. We've worked on gazillion deals among the investor group.
Mhm.
We bring up the necessary expertise without you having to go outside or get professional help or let the conflict or the issue fester and become like a real life-threatening issue for the company, which I've always, yeah, there's a company that, I've been to court, we were in court a few times, right? So you want to avoid that. So give me the bad news as soon as possible. Actually, there's another story. There's a company with our fund we invested in, and that company went out of business. And the CEO said, it's entirely my responsibility. I wasn't good at managing cash. I take the blame. And everyone was saying, well, that's good. He's taking responsibility. It's clear what happened. And I said, well, if he had mentioned it like 6 or 9 months earlier, we could have helped, right? So it's great that he's taking responsibility, but it's not very useful now that the company's gone under, right? We could have helped, had we known about this much earlier, and that's what we're there for, right? If you put your money in the company, I always say it's a marriage. You have to live with the founder for the next 10 to 20 years and many ups and downs, and you're there to help and roll up your sleeves and work with the company, solve problems.
You can understand it from the founder's perspective, though, right? Like they've created this thing, they're proud of this thing, and one of the last things they want to do is talk about the bad things that happen. But they're so key to avoiding those early smaller problems becoming, as you say, but potentially company ending problems.
Yeah, absolutely.
Considering how much expertise you have in that funder founder relationship, generally speaking, obviously being truthful is a big part of it, but what do you think generally makes for a healthy and productive long-term relationship between an investor and a founder?
You have to know each other very well and be able to not just talk about business and numbers. You have to talk about other things as well. Look, I have worked with a founder who once said, Peter, what do you do in your spare time? What do you live? What about your kids? What are your politics? Which party do you vote for? Right? That's the sort of discussions that you need. You have to become friends. All of the key founders that I've worked with, they've become personal friends. You go to weddings, you hang out with them, you have a beer with them. You're interested in their families. You talk about politics. You talk about, holidays, whatever. You become close friends. And if you have in a close personal relationship, it's much easier to solve certain business problems because you trust each other. So it's about building long-term relationships. As I said, I did a talk yesterday and for emerging entrepreneurs and said, you have to build a relationship. If you can, like 12 to 18 months before you start fundraising, just socialize with people. Go out for a coffee with an investor. Ask them out, have a chat with them, get to know them, right? So by the time you're ready to ask for money, people know you. They've seen you as a person. They've seen you how you develop. They've seen what the company has been doing over a number of months, and they're much more confident to make an investment and to work with you for the longer term. So, close personal relationship, I think, is the foundation because at the end, it's about business. It's about people. The business is another, but it's people are managing the business. So if there's a business problem, people have to solve it. So you better make sure that the human relationships that are driving the business work. I never set out to sort of develop close friendships with all the founders, but it happens in the process, and it's a good thing.
I can't count the number of times I've heard investors say, I didn't invest in the company, I invested in the person. So then how can you form that, or how can you spark that relationship in something like a pitch? Or do you need to form that relationship before you even get to the pitch point?
It often starts with the pitch, right? So, but when I sit in a room and entrepreneurs are pitching, you sort of go like, this is interesting. This person, there's something about this person. I usually get a feel about a person pitching, and then you meet up with them afterward when there's coffee or when there's a lunch, or you follow up with them and say, hey, maybe we want to have like an hour meeting, and rather than this 10-minute or 5-minute pitch, go a bit deeper and have more of a general chat. So you have to make a bit of an effort to get to know each other. Like there once was an entrepreneur who did some research on me, and they said, "Oh, Peter, you like hiking, so you want to go for a hike with me?" So we did a hike here on the North Shore Mountains for 2.5 hours, and we discussed everything. Right? That company in the end was not successful, but I thought this approach to sort of get to know me and to to do a pitch rather than in front of a screen and run through it. Have a long chat while you're walking through the mountains was actually quite helpful to better understand the business and better understand each other.
You learn a
But
lot about someone when you're, tired and hungry and
yeah,
thirsty
yeah,
and just want to go
exactly.
home, right?
Yeah. So, but entrepreneurs always have that question, like, how do I go about it? And you have to do a lot of networking. You have to have hundreds of names to go after. You have to go events. You have to be willing to spend a bit of money on coffee and beer. It takes some time.
So, have you ever then been in a situation where you were faced with investing in a venture that clearly was a great business, has wonderful growth potential. You can see a future in this, but something about the investor just wasn't right, just didn't click for you.
What the founder, you mean? With the
Yes,
or
yeah, with a founder, sorry, yes.
yeah, that has happened. Yeah, and that is sort of a situation where you have to go like, okay, we may need to get more involved with the company because something is not working very well in the relationship. Uh, it's usually what happens after an investment. You put a board of directors together, right? So to get the board of directors initiative, you need to have the right people and people who can manage that process if things are not going well. And sometimes it doesn't work well, and you have to make some changes. There was one biotech company where we had to make some changes to the board because the board was not good in interacting with a particular founder, and the founder sort of withdrew and became defensive, and that happens, right? And the company in itself was okay, but there was sort of a conflict brewing. And actually, it's interesting you asked it because I see it a lot where companies are doing okay, but there's a few things that are not working well. And then you may have to make some changes in the way you communicate, or maybe a change at the board level. So some things may have to happen. And in a really
Is it a case frequently where these things aren't, though, revealed until you do start facing some adversity? You find out how this founder is going to react when things don't go according to that plan.
And that's exactly what happens because there's always a lot of unforeseen circumstances. Things happen. I've seen one entrepreneur completely crumble under pressure. The company, it was going swimmingly. The company raised money. There were sales. It had a lot of press. And the founder, she was sort of, when things got a bit difficult, she crumbled under the pressure, and that initiated sort of the demise of the company. And those are things that you don't know beforehand at all. I mean, we don't do psychometric tests on founders. We just hang out with them and say, well, this is a person that can deal with what's coming. So that is why it's so important that you know the entrepreneur and the person before you make the investment, because then you make an assessment. Well, he or she can do it and can deal. You want to find a person who can deal with very difficult situations, who can pivot a business, who can listen to advice, who can be creative. So that is what you need. But sometimes the lead up to making the investment is too short, and you go like, well, it looks good, let's go, and then later on it turns out it's not working.
I would argue that you are doing psychometric testing. Hiking with Peter is your form of
Yeah,
psychometric testing.
yeah, yeah.
Let's talk a little bit more about those red flags. Obviously, how someone deals with pressure is probably a big one, but how about some of the harder to see red flags that might indicate that a founder might struggle with that relationship with the investor?
Yeah, well, one of the things that I see quite often is that some founders are not good at postponing making difficult decisions. Like you have to make a change to your management team, or the person running the development team, it's not working out. You have to make a call here, right? And sometimes they postpone it. And it's not always easy as an outside investor, and even if you're on the board, to figure out what's going on the day-to-day on the workflow, which is why during board meetings, I always make a lot of time, like, how's the team doing? What's going on? How is this hire working out? Is that person happy? And I've seen it a lot of times where teams go on, carry on, and things are not really working out, and a founder postpones making a decision. But at the same time, some founders are reluctant to make cost cuts. Right, that's another thing that I've seen a lot. Like I was on the board of a company where the founder blew big amounts of money on sales and marketing, and it was not yielding the results. And as a board, we kept pushing. It's like you should cut back or change the way you're doing sales and marketing. You need to make changes, because if you continue, you're going to have a cash flow problem, which she eventually ran into. And there was a lot of reluctance to accepting the board's um, position on that. So That's why I just don't look at the people, but I also look at sort of the cash situation. How's cash developing? Do you have enough runway? What's happening there? Are you making cost cuts quick enough? Are you collecting from your clients? That same company was spectacularly bad in collecting from its clients. There was a lot of receivables. Like you need to put one person on collecting the money that you're being owed. You send out an invoice. It's a software. They have to pay it, right? So things like that. So I would say I would sort of postponing decision making, being sloppy with certain things. You need to be on top of that and then course correct where you can.
And is that something that you as an investor or as a board can proactively, like you said, this one founder, you're offering them advice,
Yeah.
just not taking it. Is that how you're proactively addressing that issue?
Yeah, well, usually, what is the communication channel? What's the process? So you need to have a communication protocol when you go into a deal. Mostly that goes through a board of directors, so the investors are represented on the board, or there's a lead investor who's also a lead advisor. So there's a protocol. So yes, we have to do that. We have to make these decisions and then communicate and drive action where possible. It helps though if sometimes there's situations where a founder still has like 80% of the company, right? And he or she may say, yeah, you can say whatever you want, Peter, but it's my company. I'm doing what I'm doing. That happens too.
No, it's interesting too. We talk a lot about how founders can, form that relationship with an investor, how they can earn their trust. But I think in many cases, the investors themselves need to earn that trust of the founder themselves. They know that they're going to be, involved in a very important relationship with the future of their company. So, how as an investor can you form and maintain the trust of the founder?
Yeah. Well, by delivering on what you're supposed to do, and that's not just investing money. That's sort of supporting the company. When the company needs help, so providing that help. When the company needs introductions, to make introductions. When the next financing round, and I've been in numerous situations where companies ran out of money. Oh, we have to do a bridge round. By stepping up, right? By putting not just by putting a token amount in, but putting a financing round together, working to support the company. So I always warn investors, like if you're going to be in an advisory or a board position, in particular a board position, you're going to be doing a lot of work with the company. And I've worked with founders who didn't trust me, who didn't know who Pieter Dorsman was, and that trust and that relationship worked over time when they actually realized how much time and how much work I was putting into the company over the weekends, on Sunday mornings, etc. So it's that kind of work what is required, in particular at the early stages where founders need lots of help. So that's why I say, investors always grill founders, but founders should grill potential investors. Like, is he or she the right investor? Is he or she the right person? Or is this the right fund to be part of my journey? And again, I've been in situations where I told some founders, like, you may not want to have that investor on your cap table because they may have an ulterior agenda, or they may have expectations that are not aligned with your plan. So very important that founder does due diligence on sort of investor they're getting in to their
Fair
company.
enough. Kind of a big scope question here for you, Peter. What excites you when it comes to all of it? The tech sector, tech in BC, tech in Canada.
Mm.
What gets you excited about the next few years?
Well, I think, to maybe give it a larger answer, we're sort of going into a new phase. So the first phase of tech is sort of plateauing, and we're going into an area where there's a lot of uncertainty in the market, and it's going to be a lot harder for companies to raise money. It's not going to be as easy as it was like over the last 25 years. And at the same time, through AI and deep tech, we're seeing a whole new wave of technology that's going to redefine what's going to be happening. So that's going to be very exciting. It's going to also be very challenging. So we have to sort of rethink how we approach companies, how we fund them, have to find the new winner. So there's tons of work. And in that environment of uncertainty, there's lots of scope for new things and new exciting things to work on. And there's a lot of founders, that are around. I was at as I said, Vancouver Startup Week is going on. I did a workshop for about 40 young entrepreneurs. It's very exciting what's happening. There's lots of people. We've learned a lot of lessons over the last 20 years that are being applied in what is going to be a new environment. So that's going to be the exciting thing. So with more knowledge, we're going into an uncertain environment, and that's going to be fun.
Pieter, before I let you go, I want to wrap up by asking you for some advice. So I think any founders who might be listening today and are potentially going in to look for investment, what's a piece of advice that you wish more of those founders knew before they went into a room with an investor like you?
Okay, so I think the most important thing is to start early. So if you know you're going to be raising money, try and engage with the community like 12 or 18 months ahead of that, right? Try to go to events, socialize, meet people, build relationships, ask Pieter Dorsman for a coffee, and get on people's radar screen. And then, keep building your company throughout this period. Prepare your material so by the time you're really going to hit the road with, I need money, I'm raising money now, people go like, oh, we know this founder. He or she has been around, has been networking, and find some champions around you. I'm now working with an entrepreneur, and she approached me. She was in one of my workshops, and we're trying to put a financing together. But I've been working with her for 12 months, like informal advice, weekly calls, stuff like that, and that has helped her. And that, and I introduced her to other investors. I said, she's going somewhere. She's going to be raising money. Put her on your radar screen. So an entrepreneur, a founder needs to build sort of a network around themselves way well ahead before the actually finance drops on the table.
Well, I hope you're fully prepared for the influx of invitations you're going to have in the next few weeks for coffee and hiking.
Yeah.
You're going to be inundated in the next few weeks.
Yeah. Well, I'm sort of used to that. I get that all the time. So that's fine. And that's how we find new deals. And that's how we build a great ecosystem. So,
Pieter, it's been an absolute pleasure
Idea to
chatting
Investment
with you. I
is
wish we
sponsored
could talk
by
for a
TD
lot longer,
Ferrera
but
Wealth Advisory
appreciate your
Group
time today.
and is
Thank
made
you so
possible
much for
by
this.
Tech Alliance
Okay,
of
very good.
Southwestern Ontario. If you'd like to learn more about Tech Alliance and the resources available to entrepreneurs and startups, go to techalliance.ca. My name is Ken Eastwood. Thank you so much for joining me.